Hi, this is Zak Mir of zakstay.com with a technical week ahead beginning December the 16th based on leading UK companies reporting. And I'm starting off with temporary power group Aggreko, where we have a big charting signal. It takes the form of a failed gap fill of a December gap to the downside last year. Only partially filled that gap sort of halfway through, and since then in March we've got a descending price channel with its resistance line currently running through £16. The message at the moment is while there's no end of day close back above the 50-day moving average of £15.49, we could see further losses towards the 2013 price channel floor over the next 4 to 6 weeks, and an implied target at £13.80. It's a happier picture at Dixons, where there's been a rising trend channel since November 2012. In fact, the shares have more than doubled since that time. Great example of new support coming in at or above former resistance. Situation is also like that at the moment as we go into the end of the year with a bull flag above the 50 pence level. The message at the moment really is that while there's no weekly close back below the floor of the channel at the 50-day moving average at 48 pence, we'd be looking for further upside and a 1 to 2 month price channel target, 1 to 2 month target as high as 60 pence at the top of last year's price channel. We move along to National Express next, and here we see the stock in consolidation. It's been in consolidation since the end of the summer around the £2.50, £2.60 level. This consolidation is similar to the one seen at the beginning of the year, which was around £2.10 towards the floor of the price channel from November last year. And what we're looking at here is that while there's no weekly close back below the floor of the channel at £2.50, there'll be further moves towards the implied target here over the next 1 to 2 months as high as £3. If you're cautious on the stock, you wait for a weekly close above recent £2.70 resistance. Next up is Bwin, which is a difficult stock, even at the best of times, very, very volatile. The bias here has really been to the downside since the peak for the shares in March, and we've had the sort of swings within a falling trend channel. There's a line of support shown in red here from the start of the year of £1.15, but it looks like we're in a bear flag below the 10-day moving average at £1.19, and while that caps the share price, the risk is towards the 2013 price channel floor at £1. So that target could be hit by the stock as soon as the end of January. Finishing up with Serco, where as we know there have been plenty of problems here on the fundamental front, also problems here on the technical front with the unfilled gap through the 200-day moving average, a major sell signal there at the end of August, and it certainly worked in terms of breaking the shares down. There's still a powerful negative here on the daily chart in the form of a descending price channel from July, and what you'd really expect now is that while there's no weekly close back above 450, 460, we'll see further attempts at the downside. The favoured target over the next, say, 1 to 2 months, end of January, early February, would be £3.70, which is the 2013 support line projection. So still a very negative picture at Serco, even though we've already lost plenty in terms of the decline from the July peak. That's it for me. See you again next time.